As my mom always said, there are only two things we have to do in this life: die and pay taxes. This is Gigi. Welcome to Gigi.online. Today we're going to talk about understanding property taxes, and we're going to use some examples to do it. So let's jump right in. Example 1 is a house built in 2019 that sold in 2020 for around $304,000. By definition, this is called a new build in contrast to a pre-owned home. The first thing to notice here is that in 2020, the Tarrant County Appraisal District gave this home an assessed value of $302,560, very close to the sale price of about $304,000. In 2021, the Appraisal District made a minor adjustment to the assessed value, and then in 2022, post-COVID, when house values skyrocketed in the area, the assessed value was increased by only 10%. And although the market value increased by nearly 14%, again, the assessed value increased only 10%. I'll explain later. The tax assessor takes the base value of the current year, in this case $332,162, and applies the tax rate for each taxing jurisdiction that you see on the right. They then add those together to come up with the sum of the total 2022 tax payment due by the current owner of $8,375. Example 2 is a house built in 1972 that sold in 2020 for $215,000. In 2020, the Tarrant County Appraisal District gave this home an assessed value of $160,000, much less than the sale price, as this home was originally assessed in 1972. And then, in this example, the seller was over 65 years of age, had been for many years living in the same home, giving them a shelter against tax rate increases. That's called an exemption. More on that in a minute. In 2021, the appraisal district imposed a huge increase to the assessed value, bringing the value of the home to match the market value, as this 65 plus exemption did not apply to them. And then in 22, post-COVID, again, the assessed value was increased again by 5%. Ouch! Again, taking the base value in 2022 of the $221,999, the county tax assessor applies the tax rate for each jurisdiction, resulting in the 2022 tax payment due of $57.71 by the new owner. Exemptions provide a lot of benefit to taxpayers as it relates to property taxes, and there are three major exemption buckets. One is the homestead exemption. If you live in the home in which you are paying property taxes, and you can prove that you've done that for a year prior to the tax year, you can qualify for the homestead exemption. There's no charge for applying. And this actually caps the assessed value increases to 10% per year, which can have a huge impact over time as to the amount of property taxes you pay. An over 65 disabled exemption, either over 65 or disabled by the Social Security definition, is another exemption. It removes $10,000 of taxable value for the school district tax, not across the board. Now, at first you don't see a huge benefit of this exemption, but over time it can be significant, as we saw in the example of the home that was built in 1972. No annual increase in the percent tax rate as it relates to school district taxes. So as your school district grows and demands more taxes to fund projects, your over 65 group does not see that increased tax rate. And then veterans with disabilities actually have 100% property tax exemption. So as you can see, exemptions play a big role in reducing your property tax liability. This is part 1 of a 3-part series, so be sure and subscribe so that you can be notified when the next edition is available. And if you have any real estate questions, please go to www.askgigi.online. Thanks for joining us.